Okay, let me just quickly explain how I managed to capitalize on today's move. Because this patterns, you can know everything, the PDF off by heart, but if you don't know how to apply it, if you don't have the psychology to apply it, big problem. No. Okay, so US30, NASDAQ, I like to look at them on lower time frames. I like to go on the lower time frames. My highest time frame being the 1 hour. Okay. So on the 1 hour time frame, what do I see? I see that from the 12th of June, basically this week's price action is what is more important to me. So we have an impulse move, correction. What am I looking for? I'm looking for impulse move. Impulse move, correction, impulse move. The market does not move in a straight line. Even if it's NASDAQ, yes, Apple is doing very well, Google is doing very well, Facebook, but the market will not just go boom up, boom down. The market moves in structure. What is the structure? Impulse move, correction, impulse move. Market moves like this, creating higher highs, higher lows, lower highs, lower lows. Impulse move, correction, impulse move. This is basically how the market likes to move. Okay, now going back to the practical side of this. We have an impulse move. We have an impulse move here, correction. Now, what did I say? I said you trade the second wave of the impulse move. Basically, this impulse move happened in the past. This correction is your present. You're looking to trade the future by analyzing the correction and then enter your trades. You buy here. Okay. So today at 6 a.m., I managed to wake up and obviously checked how the market was doing. I saw that on Monday, we had an impulse move. The whole of Monday, the whole of Tuesday, sorry, the market was correcting. The whole of Tuesday, the whole day, basically correcting. And then Wednesday, during agent session, the market continued to correct. Now, here's a cheat code. Okay, I'll tell you the cheat code later. Okay, I explained something utilized within the Falcon strategy, the 1, 2, 3 confirmation. So within the impulse move, we have first touch here, first touch at the top, second touch at the bottom, second touch at the top, third touch. The third touch is the one that is important. Why? Because you want to trade the third touch. You want to make money from the third touch. You may know that the market moves in 1, 2, 3 confirmations, but if you're not making money from it, might as well leave. So I saw this as my 1, 2, 3 touch confirmation. I saw this pattern being confirmed in the form of a 1, 2, 3 touch. So obviously, if you put your trend line everywhere, anywhere on the chart, you will somehow link two candles together. So how do you accurately put your trend lines to accurately see this and capitalize from these 1, 2, 3 touch moves? Okay. So when the market, assuming, let's just forget about this price action here. Forget about this price. Let's say the market is currently moving down. What do we have? So we work with what we have. I see we have this high here, and that high here. Ne? At the bottom, what we have? The previous high, the previous low, where the market started correcting. Basically, this area here, this candle, this is where the market started correcting. So I know that is my first touch on the bottom side. So I will mark that first touch, and I will try to link it with the second touch that already happened. Remember, now we are here. Remember, now we are here. So after linking it, it leaves me with this. If you put it straight, it leaves me with this. Ne? Obviously, you don't know what's going to happen next. You don't know how the market moves. Ne? You don't know what the market is going to do. So once the market gets to this area, huh? Okay, so once the market gets to this area, adjust for most touches. Ne? You will adjust for most touches. And then after adjusting for most touches, you will be left with a perfect 1, 2, 3 touch confirmation. From there, given the correct candle confirmation, you can enter your trades. Ne? Okay. Second reason why I entered a buy in this area. We have this zone here, this demand and supply zone, aka support and resistance. So we have this zone here. Market broke it, retested, and then went up. Market came here, reversed, came here, reversed, came here, reversed. So now we can immediately see that there's an area of sensitivity. When the market comes to this area, it likes to reverse. Came here, it reversed. Now, how do we work with this? Once we see a 1, 2, 3 touch confirmation at an area of significance, we now have 2 reasons why to enter a trade. We actually have 3 reasons, the third being impulse move correction. So we now have 3 reasons why to enter this trade. The aim is to stack probability in your favor, as much probability as you can in your favor. Ne? The fourth reason, you could say the market is we're in a bullish market, making higher highs and lower and higher lows. We're in a bullish market. On its own, that's a reason to enter a trade. There are some people who just wake up in the morning, look at NASDAQ and then just buy. And they actually make money because we're in a bullish market. So that's a reason to enter a trade. Obviously, if you use it alone, it won't do you justice. But if you use it in conjunction with other reasons, you will increase your probability. So after after stacking all these 4 reasons together, the whole of London session, we had this huge push to the upside. I had my take profits here in this area. It hit take profit, went up a bit, but I was already satisfied and then reversed. And then reversed. Very important to take your profit. You can't just say, okay, this market is always going up. I'm gonna always buy and then hold forever. You can't do that. You have to take your profit. Had I not said take profits here, the market would have reversed with me, decreasing my profits, which is not good. So if you put together all these strategies, you can get you can make 4%, 4.78. I made 5%. Okay, I don't know how. Oh yeah, plus NASDAQ too. Okay, so if you put all these trades together, you can easily make 5% of your account. You can easily make like huge profits. Okay, so that was US30. NASDAQ. I cannot stress this enough. Patterns that repeat themselves over and over and over again. So NASDAQ, we have one of my favorite patterns, the double bottom. Okay, so first, the reason why I entered the trade, obviously the double bottom being the most obvious one. Ne? So we have a push to the downside. Ne? And then now we're expecting a push to the upside. You can't just say, okay, now first let me use it. Let me start like this. Let me start like this. Okay. So obviously within the strategy, we like to play with trend lines. So I will immediately put in my trend lines and adjust for more touches. So I will cater for these highs, all my highs for this week. Ne? So I will immediately put all my highs, cater for them in the form of a trend line. Ne? I will hold this trend line, clone it, and give it a twin brother. From there, I will adjust for more touches at the bottom side. I'm always trying to work with these channels. Ne? So that's why I like to have a trend line at the top and at the bottom. Okay, so immediately see that we have a touch here, reverse, touch, reverse. At the top, we have a touch, reverse, touch, reverse, touch, reverse, touch, reverse. So now we tell you this trend line likes to kick the market in the opposite direction. So when you come to the current price, we know that whenever the market touches our trend line, it reverses. So here we have a touch at the top, reverse. Then now we're expecting a reversal at the touch. This was perfect because the market is going down, gives us a trend reversal pattern, gives us a touch by using a trend reversal pattern to indicate that indeed we will reverse, we will respect this trend line, just like we have been doing since last week. We will respect it and then reverse on it. It reverses in the form of a double bottom, ne? And formation. This double bottom, it comes at an area of significance. We have an area of significance, a demand and supply area here. Whenever the market enters this area, it reverses. We break, retest, reverse. Rejection candles at this area to show how strong this area is. Then right at this area, we have reversal candles. This tells you that this area is an area of significance. So the market gave us a double bottom, a trend reversal pattern at an area of significance, signaling that indeed we've completed the bearish run. We are now going for bullish momentum. Then from there, NASDAQ went up. Obviously, trading a double bottom, it means that basically this is how you should trade it. But NASDAQ being NASDAQ and us trying to maximize profits, we won't really respect this rule when it comes to NASDAQ. Okay, so trading a double bottom, this your target, basically trading a double bottom is basically market goes down, forms two bottoms. After breaking out of the neckline retest, then your target should be equal to the distance between your neckline and your bottom here. So this distance is your target, is exactly how much you're targeting. Ne? Meaning your take profit should be here. This means that when you're trading this pattern, if you risk 1% of your account, you should make 1%. If you risk 1,000 rand, you should make 1,000 rand profit. Ne? But obviously, if you don't want to trade, you can't always follow rules. Yes, the pattern says you must follow its rules, but you can't always follow its rules, especially on NASDAQ, because you know NASDAQ is a bullish market. So if you enter a buy, you can hold for longer than you'd want. So obviously my take profit was supposed to be somewhere here, exactly at this candle. Would you look at this? I didn't even notice this. Right at my take profit, the market closed with the long wick. After hitting my take profit, it closed with the long wick. Psychological, if you a chart zombie and you like to look at charts the whole day, after hitting your take profit, after completing your pattern, and then it does this, it will mess with you psychologically because you're looking at the charts all day. So it is very important to basically let the market run and not look at charts all day, every day. So because I wasn't watching me, I was probably playing my game or on Twitter or something. The market completed my setup and then it went up. My target was actually up here. I was targeting the previous high, the previous highest high. My target was here. Yes, I traded a pattern which said I must exit here, but I did not. No. Obviously, after I saw that the market was playing in this area, I put my stop loss in profit to protect my capital, to protect my equity. Very important. Once you're in profit, put your stop loss in profit to protect your psychology so that the market does not mess with you anymore. Okay, anyway, coming back to the trade. How many reasons? Well, first reason, we're in an area of significance. Second reason, we're trading the first touch, second touch, third touch. We're trading the fourth touch, expecting a reversal at the fourth touch. Third reason, we're in a bullish market. Fourth, and probably the biggest one, a double bottom presented itself. Again, I cannot emphasize this enough. Patterns are very important. We use these patterns that repeat themselves over and over again. I won't lie to you. All my trades is patterns. That's a good thing. All my trades is patterns. Look how accurate this pattern is. When you, apparently, I've also been told, apparently, when used correctly, patterns such as your double top, your head and shoulder, this one is even worse, your arc, all these patterns that we utilize within the strategy, apparently, when you use them correctly, you will achieve 90% success. 90%, especially if you spot them on bigger time frames. Like here, with a pattern, a double bottom on an hour time frame. 1 hour represents, one candle here represents 1 hour of trading. So we have a pull to the downside, a bottom here, push to the upside to retest on our neckline, push to the downside, a bottom here, breakout, people capitalized. Patient traders, people capitalize on this move, but patient traders who respect rules, definitely not me, but patient traders who respect rules, traders who are trading $1 million accounts. Once the market breaks out, they will wait. They will wait for the market to come back and retest. From there, they will enter their buys. Yes, they will make money, they will make their profits. But me, what I like to do, I like to basically believe in my strategy, believe in the Falcon FX strategy. Ne? So what I like to do is, whenever I see, okay, let's say we have a trend line. The market is moving in a channel. Ne? Whenever the market comes here at the bottom, and I see, let's say it comes here, this is an hour chart, and on the 15-minute, it gives me a double bottom like this. Let's say this is the current market. I like to enter my buy here. I like to enter my buy here, ne? Expecting this double bottom. I know the market will reverse in the form of a pattern. I know the market likes to give us patterns that repeat themselves. So I like to, I'm not saying please trade, I'm not saying trade like this, but personally, I like to buy here. Market breaks out. After completing, market breaks out. Then from here, I like to take partial profits. So if I enter 2 trades here, I will close, take my profits. The other will leave it running. After the market comes to retest, I will enter another trade. That trade that I closed here in profit, I will enter it again. Then boom. So I'm basically eating twice. But I'm also risking, because what if the market comes and then it does not give us a double bottom, it decides to break out. Anyway, that's just me and the way I trade. But please don't trade like that. Obviously, if I have other reasons as to why I think the market is going to reverse today, I will trade like this. So I wouldn't advise anyone else to trade like that. I'll just say, please know the pattern, know how it works, and then trade it with rules, following the rules. Basically, wait for the breakout, retest. From only here, you can enter your buys. Okay. Yeah. So these are patterns that repeat themselves. I cannot repeat this enough. I will keep on repeating it. Just like the patterns repeat themselves. What am I repeating? Custom. Okay, guys, if you have any questions, please pull them through. Okay, let me just quickly answer Stido's question. Okay, Stido, when they say NASDAQ is a bullish market, ne? Okay, I can delete this. When they say NASDAQ is a bullish market, they're basically saying on a bigger time frame, NASDAQ is extremely bullish. It's forming higher highs and lower highs. It is going up, extremely going up. So forming higher highs and lower highs. Higher high, lower highs. One candle here represents 1 day, represents 4 hours of trading. So you can only imagine just this tiny candle, that's 4 hours. So you can only imagine how long this is. This is a very long time. And look how bullish it is. So that's what they mean when they say NASDAQ is a bullish market. So with NASDAQ, that does not mean that you can't take your sells. Yes, you can take your sells, but make sure they are short-term sells. Make sure you're just in and out. After 2 hours, you're out. Nothing more than that. Otherwise, you're putting your capital at risk. Because once you enter a sell, and then once you enter a sell here, and the market goes for a buy, chances are it's not coming back. What you say? I didn't get that. Someone said something.
So, Ntwana, does that mean it has more upward trends than downward trends?
Yeah. Yeah, it means that, and it also means that It has more buying opportunities than selling opportunities. So I won't lie to you. Me, I don't sell NASDAQ. Even if I see a sell, I will just look at it, let it go down. I don't sell NASDAQ. Because think about it like this. Someone wakes up every day at 7 o'clock, at 6 o'clock. They go to Apple to design an iPhone or to sell an iPhone. Now, do you seriously think the market, the share price of Apple will drop when people are constantly going to work every day? When people are busy buying iPhones? No, it will not. So it does not make sense to sell NASDAQ. I personally, I don't sell it. I'm always looking for buying opportunities. And if I don't see buying opportunities, I stay out of the market. You can check my history. There is no sell. Not even one sell of NASDAQ. In fact, yeah, let me show you. I don't think I've ever sold anything here. I'm always buying. Okay, but anyway, it doesn't matter. It does not matter. Same thing with US30. Doesn't make sense to look for sells. Yes, the market sells, but really it does not make sense to look for sells.
So US30 and NASDAQ the same thing or they differ?
They differ. US30 is top 30 companies are under which industry? It's a different industry. Ne? And then with NASDAQ is top 30 in the tech industry. So with NASDAQ, you have Facebook, Google, Twitter, Nvidia, all of them.
Okay, it makes sense.
That's technology, away. But with US30, different industry. I forgot which one. Away. Please help my friend here with questions, guys. Questions. Like even the simplest question will do. After all, the topic of today is introduction to Forex. What is that? Yeah, I have a nice demo here.
Okay. So what look on us, ne? You only look for 3 patterns, which is the head and shoulders, double top, and double bottom. Or you look for more.
Okay. I don't necessarily look for 3 patterns. I look for patterns within the Falcon strategy. Basically, I look for all of them. But then the ones that always appear, the ones that like appearing most, ne, is the double top, double bottom, and your bullish and bearish flags. Basically, impulse move, correction, retouch, multi-confirmation, impulse move.
Okay, you said there's 6 again.
Yeah.
Oh.
There's 6. Oh, no. There's 6 patterns under the category of trend reversal patterns. There's 2 categories. We have continuation patterns and we have trend reversal patterns. Ne? Continuation patterns, basically they continue. They basically summarize this impulse move correction. Ne? They come in the form of flags. You see how this looks like a flag? And then we have percent, basically impulse move correction, but price is constructing within this percent, within these triangles. They're called triangles, blah, blah, blah. Kind of looks like a triangle. The smaller the price gets, the higher the chance of it busting out. impulse move. Yeah, something like this. Then we have your flags. These ones are just, they look like flags. They're basically the same. Basically the same, but obviously people gave them different names that are complicated. So we have continuation patterns and trend reversal patterns. Trend reversal patterns, there's 6 of them, I think. So we have double top, head and shoulder, perfect head and shoulder. What else? An arc, basically double top, but then, like I said, the other high is higher than this high here. We have an arc. We have a rising wedge, impulse move, correction in the same direction of the impulse move, rising wedge. Yeah, but this pattern is very rare on NASDAQ. I've never seen it on NASDAQ. I won't lie. I'm not saying it won't come, but I've never seen it personally. And then a flag is what I traded today. Flag, very accurate in the form of 1, 2, 3 touch confirmation. So if an impulse move, this is a flag. It's not perfect because obviously the market is not perfect, but this is a flag. This also is a flag of some sort. Not a perfect one, but it's a flag. Again, 1, 2, 3 touch. First touch here, first touch at the top. Second touch here, second touch at the top. Third touch here. We want to trade the third touch. We're at an area of significance. I marked it with, why did I mark it like this? I marked it with this thing. I marked it with this area of significance. Whenever price enters this area, reverse, 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 reverse. So we have a third touch at an area of significance while touching a trend line. Now, okay, here's something. This is I'm not flexing, but this is experience. The trend line at the bottom, the trend line at the bottom, if maybe we're here, we didn't have this low yet, you wouldn't necessarily know how to draw it because there's no way to draw it. So how do you make it perfect? How do you make it work for you, even though you have nothing? You go to the top. So at the top, I can cater for this high here. I can cater for these 3 highs. Ne? This high here, and this high. Taking the same gradient of this trend line, I will give it a twin brother. Ne? I will give it a twin brother. Oh no, this does not work. If I extend it, it doesn't necessarily come here. Okay, now cut. So here, the trend line really doesn't work for you because I see even with the twin brother, it's something that I saw in the past. It's something that I saw once it already happened, so it does not work. I didn't even take the trade. So anyway, so we have the reason number 1, area of significance. Reason number 2, flag, impulse move, correction, 1, 2, 3 touch, confirmation, first touch, second touch, third touch, at an area of significance. Maybe here on the 15 minutes, look for some candle confirmation, and voila, you have a nice entry. Would you look at that? It's not perfect, but nah, I won't say this is a double bottom because it's not perfect. Anyway, so you can see that these patterns, when used together, they work. When used together, they work. Mm. So yeah, bro. Can you please keep on asking the questions? Because I won't lie, I can talk all night. That's why I need questions so that I can be
So
productive.
in terms of like to increase your win rate, you have to use more than one pattern.
Yeah. No, let me not say more than one pattern. Pattern can be one, but you definitely have to use more than at least 3 reasons why you enter in trade. You
Okay.
need 3 reasons. Like I try to explain. First reason, area of significance where the market likes to reverse. Second reason, impulse move, correction with a flag. 1, 2, 3. Want to trade the third touch. You just need, the more reasons you have, the better. Anything less than 3 is kind of risky. 1, definitely no. Even if you see a double bottom, you need supporting. Yes, a double bottom is accurate, but you need supporting evidence as to why it is accurate. It is as to why you enter in the trade. So I'm trying to think of basics to teach, but I don't think lot sizes matter. Do they? Yeah, but I think yeah. But now let's not get into this trading part first. Let's focus on the skill. Please keep the questions coming, guys, please. Questions, guys.
Hey, Hausa.
Exe,
Am I wrong to think or NASDAQ, US30, they almost move in the same direction? When NASDAQ here fast, then US30 sometimes here fast.
yeah, most of the time they do move in the same direction.
Yeah. Oh.
But it doesn't always happen though.
Yeah. Because yeah, well, most of the time I check they move in the same direction.
Yeah.
Yeah.
Yeah, they basically look similar. But both of them are paying, especially your stage. So guys, it is very important to basically stick to one or a few pairs and then master them. Basically stick to one thing and master it. With me, my favorites, obviously NASDAQ and US30. Currency pairs, I do trade them.